Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you this morning?
Good, man. We got a hot one.
We do.
We got a hot one coming in today, so I'm ready to get this one going.
Absolutely. We have a lot to get discussed today. We have the Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then the sales pitch training, where John helps us become better salespeople. Then we'll wrap things up as we always do with story time with John. But what we also always do is start every podcast with a fortune cookie. Got to get in the screen.
I'm ready for it.
And this week's fortune, as I make a mess on my desk, March will be a month of change for you. It's a bit far out. Yeah.
We got to save that one.
I'm just going to tape it to the monitor and just know that March is looming over us, because it doesn't say whether it's good or bad.
Well, actually, I can't even say this on here.
I know.
I'll tell you, and you can edit it later.
Oh, I know.
You do know.
There
is something planned, which is crazy. I just got goosebumps.
I know, me too, because I didn't think about that.
No, me neither until just now. But we do have something, y'all, in March. VIP members, we're not ready to announce it just yet. We're vetting it out. But, Tommy, save that fortune, because when we're there, we're going to bring that fortune up and clip this call.
Sounds good.
Yeah, don't forget this. I'm actually putting it in my calendar now so I don't forget. But wow.
Yeah, we've gone from no fortune cookie to actually the fortune makes
this is wild. So I'm going to send this over. You can tell my excitement, y'all, and I know you guys aren't included in this excitement. But that's okay. You will be. Some of you, not all of you. Yeah. Some of you.
Yeah. But anything else you want to expand on that, or just let's
remind Haddad on August Broker Fortune. All right, no, we're good to go. Email invitation sent in your inbox.
Awesome. Looking forward to it. Mm-hmm. So let's get right into the Broker Buzz then, since we can't talk anymore about that. First question of the week. I ran credit on a customer. They have a couple accounts that show as having been disputed, but now resolved, but also shows the customer disagrees. Is this considered still disputed, or is it resolved? I've talked about 20 lenders, and half say it's still disputed and half say it's resolved.
Super simple. Okay, you ready? Run AUS findings. So in your system, whatever you're using, if you're using Arrive, you run the findings, so it goes through the automated system. All right, AUS is what it's called. Fannie Mae, Freddie Mac, FHA, VA. You run it through, and if you read the findings, scroll down to a section that says credit and liabilities, and in there, it'll tell you what you need to do with the disputes. And it'll tell you what they're considering disputes. And then to take it a step further, if you actually go to the credit report, when you open it, hit Control or Command F, and type in disputes, there's a section on the credit report that also says currently active disputes. So it'll correlate if it's still active or not based on what the consumer's telling you. So what that verbiage that you got on there, the credit report will correlate it or not, and also AUS findings. So there's two ways to do it where you don't have to really, the lenders, they can interpret what they want, but whatever you're finding, saying whatever's on their credit report is how the findings are going to read whatever it is that's on the credit report. So you can figure it out. You just got to take a little time to gauge through it, but use that Command F, Control F button.
Absolutely. Second question. Hey team, conventional borrower, most recent 4 pay stubs, only one hits 40. The rest are less. We received a VOE form employer, and they have him as 40 hours. Underwriting is currently denying, and we are getting a second set of eyes on it. Would that suffice?
So, no, it does not suffice, just to be very, very blunt. And I don't mean that in a negative way. It's just, this is guidelines. And so I want to make sure I'm very precise with these guidelines. Now, I'm going to start with the caveat first, and then I'm going to walk into how it works. Okay. For variable income, this is what this is called. If a client is hourly and paid 40 hours a week, if the underwriter is adding up their year-to-date income and it doesn't correlate to what 40 hours a week should be based on where we're currently at in the year, they're going to consider it variable income. And I'll walk you through what that means here. Variable income is you might be granted 40 hours a week, but you don't actually work 40 hours a week. And so if the income comes back variable, this has been a big thing over the last roughly 2 years. If it comes back variable, that means that the year to date does not match up with the client's hourly rate at 40 hours a week. How do you do that math? Really simple. If the client's paid $20 an hour, it's 20 times 40 hours, times 52 weeks. You divide by 12, that's the monthly amount. If the end of the pay stub is all the way through all of July, then you're going to divide whatever that number is that you got, what you need year to date, and you're going to multiply it by the number of months received. If it doesn't add up to what the hourly wage at $20 an hour should be at 40 hours a week, the underwriter will consider it variable income. Generally, lenders will give you up to a 10% discretion on this. So if it's within 10%, because of the date that a client might get paid, might be the first of the new year, they might give you 10% roughly. So if that's the case, you have an argument. If it's not within that 10% range, it's variable income. And so what they're going to do is they're going to take W-2s from last year, 2024, W-2s from 2023. I highly recommend you get the year-end pay stub for each year so you can do the exact calculation. And then they're going to add the base pay, and they're going to divide it and give you the lower of the three. So they're going to divide it by number of months received, and they're going to average it out. And the average is based on if the client's increasing, decreasing. You'll have to look up that guideline, but that's how variable income works. So they said, can I get a second set of eyes? There is one caveat, kind of two, but the main one's this. If their job doesn't really do 40 hours. So for instance, nurses, generally, if you're a nurse, it's 36 hours that you're working on a weekly basis. If it's considered standard practice for the industry, they will allow you to still use the full overtime, but you need to get a written verification of employment. But variable income is real. Variable income is going to continue to grow, and you got to stay on top of it and learn how to do the calculation. But if they're not under any of those caveats, that underwriter seems to be correct if only one of the pay stubs year to date shows 40 hours.
Got it. All right. And the big question of the week, what happens next with the trigger bill?
This one's getting people in a, oh my goodness. So first and foremost, big win for consumers. Let's start there. Lots of organizations have been pushing this, and even AIME, right prior to me jumping on, that was a huge push on AIME side of things. So big win for consumers. So I think one of the areas is, okay, what does happen next? And there's been questions online, and people are kind of going down different paths with it. I do think about that. I was in retail for a really long time. Trained assassins, my friends, trained assassins. So what happens next? What I believe, my understanding is it will go to President Trump at some point. He'll have to now sign the executive order. It passed unanimously. And then from there, it takes roughly up to 180 days for implementation. Whatever that implementation might look like is what I would be waiting for, right? So in the meantime, as a loan officer, as a broker, stay focused on your business, stay focused on growing. The questions will get answered over time as we start to figure things out. But it is a win for consumers across the board, especially with the abusive practices that were happening and the amount of calls. And as you know, Tommy, my company, way in the past, we used to work credit triggers, and I come from that environment being in retail, just working triggers. So, it's give or take on how people feel about it. And right now, it'll be illegal here very, very soon across the board. And when it is, we'll figure everything else out from there. But stay focused, try to understand what's going on, look at the big picture, read the bill, some of the other things too. Just read it, understand it, and really get a good appreciation for it. But we're going to see what happens next here.
Absolutely. Cool. Well, if you want your question answered on the Broker Power Up podcast, be sure when you post in the Brokers Are Best Facebook group to use hashtag Broker Power Up, or just say, hey, I have a question for the Broker Power Up podcast, and we'll find it and we'll get it answered here. If you are not an AIME member, you can scan the QR code and take a look at all of our offerings and decide which tier works best for you. We have more offerings than ever, so be sure to take a look, and we will be back with some sales pitch training on the other side of the break. See you soon.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first. Couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do we have?
Oh, just a whiteboard.
Hey, look at that. If you're not
Look
watching
at
on
us.
YouTube, we got a whiteboard now.
Oh, we got a whiteboard. Yeah, for those listening to the actual podcast. But today's focus, very, very simple. Frame matters. And I want to express what I mean on this. I'm not going to keep the whiteboard too long in here just to give you an idea of frame matters. What you say matters. And here's what I mean. I want to give you a perfect example of how to improve yourself as a sales professional. Okay. We do mortgages. You do real estate, which means that there's a law that applies called Murphy's Law. It applies to real estate very heavily. It's anything that can go wrong, will go wrong at any single point in time. So with that being said, when something pops up, what I hear newer loan officers do is the way that they set the tone is they say, hey, we're running into an issue. Like, I know this sucks, and I know we have another problem, and I know it's problem after problem. I'm so sorry, the underwriter. And that is not a good framework for you to have. We have to get out of that framework. You got to start learning how to have also the tough conversations. Because a loan closing is the expectation. A loan going smooth is the expectation. Of course, you want to high five, celebrate. Don't walk me through what you did on the loan that went perfect. That doesn't help you. It's the ones where you start saying words like that. The ones, where the underwriter says, we need one more condition, and you upload it, and then they give you 3 more conditions. The one where you're waiting last minute for closing, you're excited for the clear to close, and then they give you another condition. That anxiety, and then you call the client, you tell the client, it sucks. I know it's another one, but we're almost there. Bear with me. Or you call the real estate agent. I know, it won't happen again. We're so close. Okay, understand when you talk like that, one of 3 things happens, and I wrote it on here. So when you say, I know this sucks, or you say, here's another problem, or here's why this happened, here's what's happening subconsciously to your client. Number 1, you're diminishing your power in the situation. So the entire first conversation with the client, you tell them how great you are. You talk yourself up, you put yourself on a pedestal. I can navigate any muddy water, but then when muddy waters happen, you say something like, nothing I can do. You're diminishing your control of the situation. That's a problem. Number 2, you're diminishing your trust with the consumer. Does this person actually know what they're talking about? As you start to diminish their trust. And then the last one right here is very simple. You make the client too emotional. You make the client too emotional. It's already an emotional transaction. They're going to be emotional throughout the process. So if the client is generally a level 4 emotional, you need to keep them at level 4. Maybe go up to level 5 if things start to go south. But you don't want the client level 8, 9, or 10. And so those 3 things happen every single time. And I want to take this a step further with you. I want you to think about, Tommy, walking into a dentist office. Sure. I want you to imagine that you have a root canal that you need to do. And imagine you're at the dentist office, Tommy, and they come to you and they say, Tommy, hey, listen, it's about like 3-4 hour wait. And when we do the root canal, Tommy, it is going to hurt a little bit, just to give you a heads up. But it should take, I mean, maybe 1 or 2 weeks. It will be annoying, obviously, but you'll be fine. You know, at the end of the day, your tooth will be saved and you'll be fixed. Ready? Versus, hey, Tommy, just know that I've done more root canals than you could possibly imagine. There is a couple of pain points throughout this entire process. Now, the good news is we're going to have you out of here within 2 to 3 hours tops. So rather quickly compared to what I usually have to deal with. So it's not that big of a deal. There'll be some pain for a couple of days, but it'll subside rather quickly. If you do have any issues after we perform the root canal, here's my number. You'll be able to contact me or the office, obviously, to stay in touch. But I'll be with you back in about 30, 45 minutes. Does that work for you?
Yeah.
How does that feel, Tommy?
The second one, you sounded way more in control and basically squashed things before, like we talk about all the time, bad news and good news traveling at the same time. You mixed it in. You mixed the bad news in with the good news.
And the client doesn't know. Here's the part that's crazy to me. Guys, I don't know about you, but I've never performed a root canal. I don't know how long it takes. So same thing with clients. Clients aren't doing mortgages every day.
No.
They don't know how long something might take. It's your job to communicate that to them. Yes, I know we want every loan to go perfect. That's just not the case. When it does go south, how do you handle the way you speak to clients? How do you handle the framework? How do you handle making things not a big deal? How do you make yourself a professional? So framing matters, especially when it comes to delivering news that might not be the best. And by the way, y'all, this isn't just for loans that you have to deny out. I'm talking about the loans where you know you have a fix. Those are what I'm focusing on right now. You know you have a fix, but you're dreading the phone call. Have a different framework. Have a different framework. So that's today's sales training. That's today's conversation. You don't want to be the dentist that scares people into a root canal. Be the dentist that makes people feel comfortable. Even though we know it's going to be a little bit uneasy, we're going to get a little bit frustrated. Nobody wants a root canal. I've had two. All right, it's not fun. But my dentist, he's fantastic. And I'll go to him every single time. So I hope that helps.
No, absolutely. It's about setting the framework for the expectation of the consumer in any field. And I think that's just how you go about that is just so important.
Mm-hmm.
So if you want more sales pitch training, but you'd prefer to do it in person and surrounded by a lot of your peers, there's only one place to do that, and that's Fuse. So scan the QR code. The hotel block is at 70% full. So if you have not claimed your Fuse hotel yet and your ticket, scan the QR code and make sure you make that happen. We'll be back for story time with John.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back. John, the floor is yours for story time.
So, today's story is about empowering people, but it's also about taking a step back and actually learning how to empower somebody. So there's been a lot of conversations lately about third-party processors or about processors in general, in-house, third-party. LOAs, loan officer assistants. We get these questions on the broker power up. When should I get an assistant? When should I get a processor? When should I do? When should I do? When should I do all of this? Well, you know, the more I think about it, I've given answers on the number I think it should be, the number I think it shouldn't be. Here's actually our struggle as salespeople. And I say our struggle because I believe most, if not all, salespeople, we all go through very similar cycles in our sales journey and our sales career. You see, as a high-performing salesperson, we get into this mode to where it's a look at me mode. Look how good I am. We get in the mode of this transaction cannot close without me being attached to it. And we start telling ourselves that over and over and over again. But then we get to a place to where we go, we're so busy, I got to get an assistant. I got to get a processor. I got to get third party. And then we bring that person on and we say, okay, here's what I need help with. And then as we go to help them with whatever it is that it might be, what we forget to do is take a step back and give them the process and procedures on the specifics of what we want. And then when they don't do what we expect them to do, we get upset. And we say, like, great, of course they can't figure it out. Great, of course they don't understand it. I always got to get involved. There's no way I'm ever going to be able to do more business. And by the way, I do it too. And so I'll tell you a story about my admin. And when I first started to get busier and busier, it's about 4 or 5 years ago now, started with my admin. She's still with me today. And we're growing our relationship. And I was like, okay, here's what you're going to do. And hopefully you figure this out. And I said, yeah, just sit next to me all day and shadow me. And from there, figure out where you should help me. So she's shadowing. And things that I think I need done aren't getting done. And so I'm like, great, here we go. She's not figuring it out. What's going on? Is this the right fit? And then one day she comes in and she says, hey, I want to help you. But if you're not going to tell me exactly what you need, I don't know how I can. So I looked at her. She was very serious and it obviously meant a lot to her. And I said, okay, you know what? Let's sit down. So we sat and we spent hours, hours mapping it out. How do you want me to reply to your emails? Which emails don't you want me replying to? Which emails do I need to flag you for? How do you want me to handle when you're late to meetings? And was it painful to go through that process? It was. It was very painful because I said, I'm busy. Oh no, I got so much going on. Well, it turns out, y'all, that when you take the time and you spend the 4, 5, 6 hours mapping it out, being specific to the help that you need with your processor, with your admin, with your LOA, you would be shocked how much easier life gets. You'd be shocked how much more efficient you get. And all you had to do was deal with a little bit of pain up front. So for those out there that want to scale, you want to grow, you're already doing business, but you're trying to figure out what to do next, and use the type of person that says what I used to say, they're just not going to get it. They can't do it like John Haddad. They can't do it like me. Well, then I challenge you to take a step back and ask yourself this question. What do I actually do on a day-to-day basis? Can you write that down? Can you put it on paper? Can you articulate it to me if I were to ask you that question? Because for the longest time, I couldn't articulate it. When people would ask, why are you so good at structuring loans? I don't know. I'm just good at it. That is not an answer. So if you don't know how to articulate your day, if you don't know how to articulate what you do, if you don't know how to articulate your process and procedures, how can you expect somebody you're hiring to just figure it out without your help? That's my story. Yes, it was intense today, but in order for us to grow, in order for us to scale, you need to have a team behind you. But in order to build a team, you gotta know how to empower them. That is my story. I hope you all appreciated it. Until next time, my friends.
Loved it. And just want to add something to it, actually. We recently grew the marketing team here at AIME. And one thing I did was sat down with the new team members and walked them through the processes that we do, but didn't just talk it through with them. I built out bulleted step by step how I did things so that when the meeting was over, they could just refer to that. And between the meeting and remembering going and actually doing it, because I walked them through it, I had them do it as we were going through. So between the muscle memory of doing it once, getting over the fear of doing it once, and then going through And having that bullet point that you built with me to go over and remember how it's all done just decreases the amount of anxiety of someone new coming in and doing a task that you've been doing every day. And it's just it you lose the repetition of you doing it every day. You don't even think about some of the steps that you take, but that could be a trip or a hazard for someone that has not been doing this every day. So just it's so important to take that time, like you said, and just educate and train.
And like you said, Tommy, it's every profession.
Every
It doesn't matter. It doesn't matter. It's personal life too. Conversations with your spouse, your loved ones, your kids. Map it out. How do your kids know what to expect from you if you're not telling them what you expect? Be a good person. What does that mean? It works everywhere, y'all. Thanks for sharing that, Tommy. Until next time.
Yeah, thanks for tuning into this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor, hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel, ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.